Time now for the business news now, and Stephen Carroll is here with me in the studio. Good morning, Stephen. Now, oil prices at the top of the agenda as ministers from the world's biggest oil producers meet in Vienna.
It's been a rough couple of years for oil producers. Despite a rebound in prices since the start of this year, price levels are still half of what they were back in 2014. For the OPEC group of oil-producing nations, that means huge falls in government revenue. Now, Brent crude, which is the international benchmark for oil, hit a low of $27 a barrel in January. It briefly touched $50 last week. Has come slightly below that level now, as you can see, just under that $50 mark. Now, OPEC members have been unable to agree on capping or reducing production to help support prices. Iran's oil minister on the way into that meeting in Vienna calling for a return to production quotas for individual countries. Well, to talk a little bit more about this, I'm joined by Naeem Aslam, who's the chief market analyst with Think Forex. Naeem, thanks for coming in to see us. Are you expecting that OPEC will come up with any sort of agreement today on supply levels?
Thanks ever so much for having me. No, absolutely no. Reason being, I don't think it's about agreeing to some sort of a production level. This particular meeting is about new faces coming together, and if they can pull out a united front, can they repair OPEC's reputation? Because if you look at the cartel's reputation, we do not have any united front. We have Iran, everyone else just fighting for their own market share. So I think what in this meeting is very important is not about the oil freeze, because that's not, unfortunately, we're going to have anytime soon. But these new faces, 4 ministers are only old ministers from 2015, and the rest of the ministers, they are all new. Can they work together? Can they curb that supply? Can they fade that supply glut on the market? Can they address the issues of demand and supply? Can we have that sort of a stability in the oil prices going forward? I think that is very much in play with the new oil minister from Saudi Arabia. Now, he's not being very vocal, and he's not going to be very vocal. But still, both countries, Iran and Saudi Arabia, can they form a united front? Perhaps that would repair the reputation for OPEC.
And Naeem, what does this mean for oil prices? Do you see them rising further?
Well, we have been very vocal that the level of 50 is very crucial, because soon we go or start touching 55, US shale oil will start coming back on the market. Now, whether we have a demand to provide enough abutment, enough support with respect to those levels, we are entirely not sure, because we don't have any proof of that. If you look at China, which was the second biggest consumer for oil, you look at the manufacturing, industrial, ISM, any sort of a data, the picture is very much negative. The sentiment is very adverse. It's skewed towards the downside. We're not seeing any sort of more resources coming up, more demand picking up from there. So there is no reason for oil to be trading at $55 or $60 towards the end of the year. Our forecast is that we will be very much ringing or dragging between 50 or 55. And even then, at that level, we are potentially open to a threat of a major sell-off, again going towards the level of early 40s or late 30s.
The other big meeting happening in Vienna today is the European Central Bank. They're on tour. It's their meeting today, unusually in Vienna. Of course, we had the big announcement from Mario Draghi back in March, rate cuts, increases in bond buying. Is he just going to sit back and celebrate today, do you think?
Yes, that was certainly very elating for traders. But now it is a matter of a question now whether this meeting is going to be warranting for some sort of any new reactions. No, we're not going to have any new reactions. The reason being, if we look at the inflation data, that is picking higher. It's taking higher from minus 0.2 to 0.1. You look at the inflation growth, and I know you love speaking about France with respect to it. Look at the GDP growth for the first quarter. It is really, really improving. Reason being, yes, there are temporary factors that you have a year of 2016, enormous sales coming up from that perspective. And then there was a recent events of a terrorism that's fading away. And then now more tourists walking in. I mean, yesterday when I came to France, I was completely taken away how busy the airport is. So again, that sector is picking up with respect to tourism. And then you look at the money supply. You are always interested whether this money supply, how that's going to react to the French consumer. You look at the lender's perspective, that ratio has gone up by 1.3%. You look at the money supply with non-corporate financial services, so the institutions are lending them higher by 2.5%.
Which is what Mario Draghi wants. He wants the banks lending more money, he wants more money out there.
Absolutely, you're hitting the nail on the head. So we are seeing some sort of improvement. So what he's going to do today is he's going to buy more time. But what is important in this one, we're not saying that this is not a non-trading event. This is certainly a trading event, because one of your favorite books that we always talk about is The Art of the War. If you are going to a jungle and you wanted to prey or hunt something there, then you wanted to have some sort of a guide with you. Otherwise, you'll end up in a bush and you never know what's that in that bush.
So Mario Draghi is our guide, you're saying?
Exactly. So we need to know what he's going to talk about with respect to bonds. What sort of a bonds we're going to buy? Who's going to be producing those bonds? Are we going to have still that sort of a fight between Germany, France and Italy? That is the main question today.
And you think there could be some good news for Greece out of this meeting?
Yes, I'm very excited that you brought that point, because with Greece, now they have secured another repayment for the IMF. The question is, are they going to reinstate that waiver that we discussed back in January with respect to the collateral?
This will make it easier for Greek banks to borrow money to be able to fund themselves from the European Central Bank.
Absolutely. And then secondly, can they be back on the shopping list for ECB? The ECB, because they still wanted to expand their balance sheet. And the one way of doing that is that, okay, the corporate bonds, the purchase bond, which they said they will do it, that's going to start this week. So the limit is from 5 to 10 billion, but perhaps they will start with 1 billion. And that will be the key agenda. Let's look at the details for the corporate bonds.
Okay, Naeem Aslam from Think Forex, thank you for coming in to speak to us this morning.
Okay, Stephen, take us through what's happening on the stock markets today.
Pretty mixed picture on the Asian markets today. We've got Japan's Nikkei down over 2%. That's after the government announced they would delay that sales tax increase. Was slated for April of next year. It's now not going to be until October 2019. Investors a little bit worried about what that means for the government's economic policies. Small gains, though, across the rest of the Asian markets.
Okay, to Greece next, where consumers are facing some unpleasant changes from today.
The rate of value-added tax on goods and services goes up by 1 point today to 24%. The hike was part of a deal with Greece's international lenders to secure the latest instalment of its bailout cash. Other sweeping tax hikes on alcohol, tobacco, mobile phone use and internet access will come into effect next year. Julia Seeger has the details.
Greeks coming to grips with another tax hike. The country's main sales tax has gone up from 23 to 24%. It's the sixth such tax hike in as many years. But the owner of this grocery store in Athens says he's used to it.
Last year, they increased taxes on coffee by more than 10%, from 13 to 24. That's criminal. The difference is huge, and it will be paid for by the consumer and will lose out on profits.
Greek lawmakers approved the increase in taxes as well as pension reforms last month to qualify for more international bailout loans. Other tax hikes on services heavily used by Greeks, like the internet, fixed telephone and pay TV subscriptions, are expected to come into effect next year. Businesses and consumers alike say the ever-increasing tax burden is weighing them down.
I don't understand. The IMF chief Lagarde, independent economists, and our guys here, they've all admitted that this formula with the taxes leads nowhere. We are not able to pay, that's it. It's now a matter of survival. We will not be able to pay.
Some economists argue these measures could hurt consumption in a country already reeling from 6 years of a financial crisis. Over that time, the economy has shrunk by a quarter, and the current jobless rate is hovering at around 24%.
Now, finally, Stephen, in the US, the return of a familiar face at Walmart.
That familiar face is the smiley. The smiley face used to be used in the world's largest retailers' advertising campaigns in the 1990s to indicate good prices and good service. But despite the rise of emojis, they actually scrapped the smiley face in 2006. The company yesterday announced its return in advertising and in in-store promotions as well. This is as Walmart, is trying to boost sales at its US operations, and it's hoping to do so with a smile.
Okay, Stephen, thanks very much for that. That was Stephen Carroll with the Business Roundup there. Right, more news coming up in just a few minutes, and in focus, we'll cross over to the United States and look at how the Republican Party is scrambling to unite ahead of November's election. Does the so-called Never Trump movement stand any chance of stopping the Donald, the man who now seems unstoppable?